Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had good day trading today. Market is down about 1% today on the S&P. Let's follow up from what we've been talking about last night. So there are a few things we talked about last night. Was obviously one, we talked about how the bulls are working with overbought condition, right? We talked about how bulls are tired and we would need bears to take advantage of the situation that bulls are tired, making this big gap up yesterday. Well, today you can see this was first hour session, second, third, fourth, fifth hour. So it was kind of grinding sideways for a while, hanging up, hanging around, holding up. And then the last hour we saw the selling pressure coming. So most of the selling did come towards the end of the hour, and that's something that we've been actually witnessing for the last month and a half or so. So pretty much this has been kind of what the trend has been, right? We see a move and then it kind of stays there for a little bit and then it pulls back and then it stays a little bit. So it's been kind of a lot of choppy sideways type of action last month and a half or so. So let's dive in and let's try to digest what happened here today. So first of all, I think this is exactly what bears needed to do, kind of flush out some of the chasers up here, right? So we saw that that's a pretty strong bearish downturn towards the end of the hour. Especially it happened towards the end of the hour. It looks like, again, and we talked a lot about this pretty much throughout the last several weeks. It looks like a lot of short-term traders, their stops are getting taken out somewhere in this vicinity. And a lot of times what happens is when the market is, when market gaps up, right? When market gaps are like this, and a lot of short-term traders, they don't like to hold things overnight. And so they miss out and then they trade. What happens is they looking for that follow through, right? So we saw a big gap up. They're looking for that another potentially a big follow through. And so I think a lot of people might have chased it and they must have put a tight stop because this was already a big move. We talked about that. What was the move on that? Let's look at it real quick. Where's my tool? Right here. So I think it was about here. So that was a 7.29% run in just about 4 or 5 days. So that's a pretty big move. We just pretty much went straight up. And I think, people who missed out on that move trying to, chase it up here, putting a tight stop, hoping for another gap up today or a big follow through day. And then when pretty much all day we're grinding, as you can see last 4 hours here. And then, 5 hours, right? 5 hours we're grinding. And then when it looks like, because obviously, bulls are working with, and we talked about this yesterday, bulls are already working with overbought condition. They're already getting tired. And so bulls tried to get up, and then finally when bulls were not able to take out the prior resistance, that's a pretty obvious resistance, right? We know that's where we failed last night. We talked about the shooting star candle. So that's that 295, 296 is the obvious prominent short-term resistance. So when the bulls were not able to take that out and continue higher, bears really did come down and flushed it down. And, a lot of stops were taken out. A lot of short-term traders pulled out, and bears took advantage of that situation. That's exactly what bears wanted to see today. Bears did not want to see a follow-through. Bears want to kill this momentum as quickly as possible, which we talked about yesterday. So what bears need to do is the best way is gapping it down. Best way is gapping it down, potentially trying to put that into a island top reversal. That will be best way. Well, bears already learned their lesson where last time there are a lot of gaps here, and bears did a good job of just pushing it down, flushing it down, right? You can see that there's a lot of selling that happened last Tuesday and last Wednesday. But even last Tuesday, last Wednesday, what I talked about was bears need to gap it down, because when they try to bring it down, there are too many supports, right? There are too many support for longer term, midterm, and all those down gaps or those filled gaps are going to provide support. And so bulls took advantage of that situation and brought it back up. So now we're back here again. We know that just filling the gap for the bears, for the sellers, just come down, filling these gaps is not going to work, because it's going to provide a support. And you can see we already have this guy is already rising. And yesterday I said that when I see that shorter term moving average, let's call it a midterm moving average actually. Let's call this a midterm moving average. Let's call this a long-term moving average. I've added another moving average. You can see what moving average that is. That squiggly line, that light green, light bluish line there. So I'm always changing moving averages, adjusting them, reconfiguring them, because again, as I explained yesterday, I believe that the sentiment changes so quickly when you're analyzing short-term movement like this, as we're looking at 65-minute charts. So sentiment can quickly shift to bullish to bearish. So now I got 3 moving averages here. So we've got short-term moving average, we got mid-term moving average, we got longer-term moving average. Let's stick with these moving average for a while, probably this week, and see how that go, right? So yesterday I talked about, as long as this moving average is rising, despite the fact that there could be up and down choppy shenanigans, I want to continue to give benefit of the doubt to the buyers. And you can see when this midterm moving average rises, you can see that bulls were able to bring it back up, even though they were pullbacks. So keep that in mind. Trend does not start in a 1 or 2 days of downturn. It takes a while to develop a trend. And obviously there is no bearish trend. We've been talking about the longer term trend is bullish. So what bears really need to do is first see if they can gap it down, turn this in island top, and then start something from there, right? Or if we see, because you can see my short-term moving average here, that squiggly line, we're just right at that level. And keep that in mind. The short-term moving average does have a pretty impressive resume. That's the reason why I depicted that moving average, is because you can see we're near that level. That short-term moving, do you see that right here? Right over here, right over there, and right over here, right over here, right over here, right over here, and right over here. Do you see it? So we're right back at it. And so I still, even with the decline today, I still have to categorize this market as of now, as of this price action. Things can change tomorrow morning, but as of now, as of today, as of this moment at the close on this price action, now that we're staying at 290.02, I still have to give benefit of the doubt to the buyers in the short term, because now we're right at the moving average. In the midterm, also bullish. In the short term, also bullish. But in the micro term, it's bearish. Just last hour, the micro term, we do have a bearish selling pressure. So I did put a little short-term Fibonacci here. We got that very first level Fibonacci, which is coinciding with that short-term moving average. And that's no accident there. And then you can see the second level of Fibonacci here is 289.13. That's where I put that horizontal line there. And if the bears bring it down early tomorrow, that moving average is still in that vicinity. So that's going to probably provide that support. So best bet is, again, gapping it down would be best bet. If the sellers start bring it down, start flushing it down, we're going to meet with some of the moving average supports in that vicinity. What the buyers need to do though is we do have a micro term selling pressure, micro term bearishness, just last hour here. Need to kill that momentum as quickly as possible by potentially getting back up, or by potentially gapping it back up. And keep in mind, buyers done something like that in the past, where you see that was back in May 6th. We saw that the last hour of May 6th, we saw that bearish micro term bearish sentiment there. And keep in mind, at the time, that moving average was still rising, that midterm moving average, that blue dotted moving average. And you can see how buyers just gapped that up. So we cannot rule that out. We cannot rule that out because we're still in a bullish sentiment. So bears got to make sure that doesn't happen. Bears got to make sure there's no gap up. There's no, buyers hanging around like this here. If buyers hang around in this vicinity for several hours or something like that, there's a risk of buyers bring it right back up, because you let buyers hang around. They love to hang around. They love to, you know what I mean? Like, they love to float around and then like to bring it up. Bears, however, don't like that. They hate that. Bears don't want to see this market floating like that. Bears just want to bring it down hard. So that's what bears love to do, and that's what bears want to see tomorrow. Continue to bring it down. Best way is gapping it down. Let's look at the oscillator here real quick. You know what, before we go to oscillator, let's just zoom out here and just look at the bigger picture for a second. So remind ourselves where we're at. So you can see, if you look at the long-term picture of things, we still have a lot of supports in this vicinity right here. Right, there's a lot of supports in that vicinity. We are still in the longer term. We're trending higher, and we got all the moving averages still rising. So we still want to give benefit of the doubt to the buyers at this point. Let's look at the oscillator here. So yesterday we talked about that bears or bulls, the buyers are getting tired, right? They are working with overbought sentiment, and you can see throughout this entire move since late March, when we see the this oscillator, that my oscillator show overbought sentiment, it's a bearish sentiment, right? It's giving us that bulls are getting tired and they're losing steam, and bears took the advantage of that, and then you can see that it is pulling back. Only little bit tricky part about that is, obviously bears want to see this thing going all the way back down to the oversold sentiment, oversold level, the bottom of its band. Except sometimes, looking at this April here, even though we got into overbought sentiment for about 2 weeks here, bulls were able to grind it up higher, right? And you can see back in late April, bulls were able to bring gap it up for another day or two. And even, I think here, it looks like we are that near that level. We pull back a little bit and then brought back up here. So you can see there's some of these levels where there was kind of there was a pullback, and then there was another up move. You can maybe even call that a stochastic double top, right? So we'll see how it plays out. I still want to give benefit of the doubt to the buyers at this point in the short term, mid-term, long term. But in the micro term, we got that bearish selling pressure, and bears want to continue in that. Bears want to continue with this selling pressure, not letting bulls hang around, not letting bulls gap back up. So we'll come back tomorrow, we'll follow up, and we'll go from there, right? You guys have a wonderful evening, and good luck trading tomorrow.